Hey there, welcome to the channel. So here's your Sunday update for May 8th. We're going to take a look at the setup from last week and what's going on this week. Okay, so first of all, looking at the charts from last week, we can see that we really had really rough day, rough week last week. So we're in this sell-off. We're going down. And last week, with action, actually, there was some rallies in there and stuff because we ended up with this doji and really wide-ranging action. And the thing to note, too, is that it was on pretty heavy volume as compared to the average volume. So the setup for it is, kind of interesting. We really had a lot of volatility last week. So if we look at the daily, we'll try to zoom in on this daily. Looking at last week, we can see that it was just very volatile. And, so that was the interesting thing. You had a situation where you had, the Fed gave us a 50 bip rise and the market rallied. Then the market has second thoughts and goes into the tank on it. And then it just spends its time confused on Friday. So very volatile week. And, that's kind of would be the expected kind of bear market behavior. So that's kind of the setup that we're looking at right now. So events coming up this week. Note that we still have a decent amount of earnings being reported, and I don't know how many of these are really the key bellwether companies, but there's a significant number. And then the week after, it's going to fall off. So this is, kind of getting to the end of the earnings season after this week. And then it's really quiet on data for, Monday and Tuesday. But on Wednesday, here's the data that's maybe kind of interesting. So as I pointed out in my previous video, I was talking about looking at the nowcast CPI data and how maybe the inflation has peaked. The indication is that, it's already peaked, at least in the short term. So Monday could be significant because we're going to get that CPI data, the core CPI, and we'll kind of see what's going to happen there. And then we also get PPI the next day. And then on Friday, we got import prices, export prices. So I don't know how important all that stuff is. I mean, I can't really say. I mean, Monday's the interesting day, possibly because if it shows a decline in inflation, that could be viewed as bullish by some in the market. So going back and looking at the chart, so looking at our Brent crude here, we could see that, we had this symmetrical triangle forming here. And, we had the breakout last week. So, this thing has been going. So it's kind of a triangle. So basically what you have is ideally you would have 3 points on the top, at least 3 on the bottom. So we have 4 on the bottom, 3, we have this little gap here, but just kind of take it in, from my perspective, I just take the spirit of the pattern. The spirit of the pattern is what? We have a consolidation. We're unable to make progress up or down, and we're coiling. We're getting to that point where the price is no longer moving by a large range, and it's got to make a decision. It's got to make a decision. We're going to just keep going straight, or we're going to make a turn and go down, or we're going to go up. So last week it pushed and it decided to go up. So that could be because the EU has decided that they're going to try to ban they're going to ban Russian oil imports. How that goes, I mean, there's some resistance by some countries. How exactly that is actually implemented, we'll see. But at least they're kind of pushing on it for right now. So that seems in play. Just curious, I was looking at Bitcoin and I don't know what to think. This is one heck of a volatile chart. I mean, the only thing you could say, one of the things you could say is that we're our narrow support area, in this area down 32,000, seems like there's some support. So who knows? But, we had a really bad week in the treasuries. I mean, look at this thing. It moved up 8%. So now we're in 3.1% is where the treasuries are at. So that, the rates just keep pressing up. It's rather amazing here. So I guess I wouldn't expect any relief from that anytime soon. And it's kind of interesting because thinking about it, we have this high of somewhere in the 3.2, 3.3% range back here, and we're rapidly running towards it. So kind of interesting that we're running towards that. And that was in 2018. So, it's interesting to see if we start running up beyond that, we'll start going up to highs that we haven't seen for quite a while. So that could be, interesting. And kind of interesting too, if you look here, this is sort of like something, but it's almost like a head and shoulders. So you had a little shoulder here, you have a head peak up and another little shoulder, and it kind of broke. So it's not a head, it's not a head and shoulder top, it's an inverse flipped head and shoulders. So like a head and shoulder top would be something comes up, goes like that, and then like that, and then it breaks this neckline and goes down. That's a head and shoulders top. The inverse is you're coming down, you have something like that, you go down further, and you once again, you get some kind of a shoulder pattern here, which you can see over here, and then you finally break it and start going up. So it's an inverse head and shoulders bottom. It kind of that's kind of the spirit of the pattern that's in there. And it's on the weekly chart, so it's of significant duration. You can see these on a 15-minute chart, and it only applies to, the 15-minute time frames and stuff. So yeah, the rates just keep going up. So one other thing I want to talk about too is wheat. And, it's interesting here, this type of pattern here. Now, like, obviously I've cut this off. I haven't drawn this technically correct, but I'm just trying to get to the spirit of things. So let's say maybe this is more of a symmetrical. Maybe it's something like this. And you could say it's kind of a pennant. Maybe it's a compression pattern. Maybe it's kind of a triangle-like, or maybe if I use the blue line here, it's ascending triangle. Either way, it's trying to push up. And if it has to really get above this 1150 to kind of break it up, and then it's, we'll have resistance here. So it kind of looks like, wheat is kind of working its way into that position where, maybe it's going to pop out and go higher, which of course is horrible for humanity. But then I saw this article and just kind of looking, this is in The Guardian, and they talk about they're using satellite imagery to look at Ukraine's production. And a couple interesting things here. Ukraine apparently was the 6th largest exporter of wheat. And so last year they produced 33 million tons of wheat and they exported 20 million tons. So that's kind of interesting. Now, because of all the issues that are going on and stuff, they're estimating that maybe they can only make 21 million tons this year. Okay, so that's not exporting, but that's the amount that they might be able to make, but it could get worse. So that's down 23%. So that's significant. But there's something else here. So not only has the wheat production gone down 23%, and remembering that they don't export all of it, they export a significant portion, but not all of it. If we look down here, there's something more going on. And I'm not sure where it is, but what they did do is because Ukraine, obviously they'd be concerned that they're going to have enough wheat for their own people. So they've moved to ban exports of grain and many other food products in an effort to preserve its own food supplies. So this is very significant. So now what does this mean? In other words, last year you had Ukraine export 20 million tons, and this year they are going to export 0 tons. So 20 million tons of wheat has come off the market. So that's kind of pretty significant. It's a significant amount of wheat, and this is unfortunate because this is going to be something where it's going to affect those poor countries and countries that need to import that food. And so that's kind of where, this is the kind of thing you look at the setup in the wheat, you kind of be shocked that wheat was at $800, and now it's, in the 1100s. 50% plus increase in a very short amount of time. Well, given, that 20 million tons has just come off the market, it could even go further. So that's the situation with that. I think overall we'll have to see for this week. I mean, we had a lot of volatility next week, so maybe, this week will be more calm. And another thing that's kind of interesting about it is that if the market really catches a hold of the inflection in the inflation, as I was saying in my other video, what I would think is for certainly some of the bulls will be like, hey, here's the inflection in inflation that we've been predicting. The bulls will say, hey, inflation was transitory. It is transitory. Okay. It's lasting longer than we want. It persisted longer than we want, but it's transitory. That'll be the bullish argument, I think. And so they'll move on. I think even like the Meek Evans he'll be happy. He'll be like, hey, this is really great. This shows that it is inflecting. And so we should expect lower inflation. And a consequence of that lower inflation is the Fed doesn't have to be as aggressive. So in the last meeting, they were talking about for the next few meetings, they're talking about raising interest rates by 50 bips per meeting, 50 basis points. So if this comes out and the market might be thinking like to back off. So it'll be interesting to watch and see if any of that changes, see if the expectations in the pricing in of how much of an interest rate increase we'll get at the next meeting, if that changes much. So that's something to keep an eye on for this week. All right, well, that's it for this one.